Hey, good afternoon, everybody. This is Chris Robinson, Robinson Ag Marketing, with today's post-close grain and livestock comments for August 5th, the Wednesday. We made it through hump day. Um, Very key levels here, and I'm going to start with three numbers. First, we're going to start with D's corn, down 5.5 cents at 460. Good news, bad news. The bad news is we're down a nickel and a half. The good news is we held the 50% retracement of the rally. We had a 66-cent rally from the June 30th acres low at 425 and three quarters up to the high tick there, which was 492 the last week in July. So we went from 492. Today's low was 458 and a half. It's held. That is half back, roughly 33 cents of the 66 cents. Now, are we going to hold here? I showed you hope. If we do not, the next downside risk is 451. What are these based on? These are just based on doing the chart homework, which is what I do for you guys every day, so you don't have to do it. So downside risk 451. If you look at Deest wheat, we had a $1.38 rally from the June 30th low. $1.38. Lo and behold, guess where 660 is? It's right. It's halfway back. And for 4 or 5 days now, we've been spinning at 660. We went as low as 650. Looked like it was going to go lower. So again, good news, bad news. Deest wheat up 4 cents, holding in here at the 50% area. Very, very key, because at 50%, every bull and every bear is equally right, equally wrong, right? If you're long from the top, short, whatever, you've got a decision to make. So these are huge levels. Lastly, in the beans, we had a $1.31 rally from 11.25 to 12.56. All right, that was the rally. And today's last night's low, 11.67 and a quarter. Not a whole dollar, but doggone it, 90 cents of that $1.30 up in smoke. Why is that area important? Well, this 69.70 level, not only is it the 100-day moving average, but it was also the 62% retracement. And why does that matter? Well, now we've gone through all of our retracements. 1188, 1190 had been a big halfway back point. I'll be honest with you, we had end users and stuff, we were trying to buy it there. Luckily, we didn't stay long for 15, 20 cents, but we were taking, 3, 4, 5, 6 cent shots at that area, hoping it would hold. Now we have to hold if the 100-day moving average here at 1170 holds. It held today. It took it out during the day by 3 cents, 1167 and a quarter. So the problem is, in my opinion, if we're doing this for 30 years, we don't really have a big weather story. I know guys are arguing about yields and yada, yada, yada. And I know that I know this: when the crop conditions for corn drop severely 2 weeks in a row and the market doesn't care, there's enough disagreement out there. Now we'll all find out at harvest or in January who was right, who was wrong, what the yield was. I So much wasted time and energy arguing over what the yields are. All I'm concerned about, and all you should be concerned about, is what the price is. The market has the final say so, right? Not the guys at the coffee shop, not guys like me who talk about, where prices could go or where they're going to go. The market has the final say so. So this is why this is right now is a very, very critical time. If you've done some risk management, you want to be adjusting all your hedges, puts and calls. If you had puts on the rally, you should be looking to roll them down, get more time, and also put money in your pocket. If you had calls on, obviously those have gone worthless because we've sold off. Do you want to adjust those calls? It's totally up to you. If you had bean calls on at the top, now we've broke 90 cents. You might want to adjust your calls down closer if you're looking for a rebound. So manage your risk. And moving over to the cattle, another good technical day, but again, cattle has been some of the toughest day trade we've seen for a while here. September feeders opened up at 46, traded 44.30. Looked like we were going to sell off a little bit, turned around, and then almost took out 350. We've had big resistance at 348. We did settle there at 348, 37 half. Excuse me, 349 is big resistance. I apologize. 349 is big resistance. We did not get the 350 print, but if you look at where we are versus where we've been, right? If you look at that September feeder, again, very, very technical. You take the high on June 25th at 374 and a half. And then the low, when they came out with all the borders opening, that was on July 27th. We traded 331. You take that move, okay, and if you run the retracements, which is what I do, just basic stuff, we have come back, and we were sitting right at the 38% retracement here. The next upside, 352, and then if there's more in the gas tank, 357. So a really good reaction when you've thrown so much bearish stuff at the cattle market here in the last 6 weeks. And now you've got the feeder index, which is caught up in the August contract. They're side by side now. So now we don't have that to talk about anymore. So good recovery in cattle. You also have the positive that's going on in the stock market, making new all-time highs. You have the Dow hit almost 55,000 today. How about that? 55,000. And every time I turn around, there's somebody telling me this is 1929. We're going to be down at zero in a year or two. Every time I hear that, the market just goes higher. We are overdue for a correction, absolutely positively. And when the correction comes, it's going to be a doozy. And when the correction comes, you're going to have people saying, I told you so, I told you so, I told you so. But in the meantime, we keep going higher in the stock market. And the market can remain irrational longer than some people can remain solvent. So be careful stepping in here and selling this thing. If you're worried about a correction, what's the worst correction we've had in a long, long time? That was the '08 correction. '08, '09. It was '07 to '09. We lost 55%, right? The COVID correction was a little over 32%, but it lasted, 6 days. And then once they turned the money spigot back on, we completely went higher and made new highs. So we are overdue for even just a basic 10% correction, which is normal. 20% is a bear market. And then, we're going to get some 35, 45, 50% correction. I had guys talking about, oh, this looks like 1987 to me. Again, that was about a little over 50% correction from the top to the bottom. So yeah, that's always the risk, and people will talk all day long and always about, we're going to crash, we're going to crash, we're going to crash. Sooner or later, that's going to happen, and that's probably would take the steam out of cattle. So until that happens, though, and I don't have that crystal ball. Hopefully you do. If you do, give me a call. Chris Robinson, Robinson Ag Marketing, 312-638-8868. I'm going to wrap up again. I'm going to beat this horse one more time. These are very, 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 very important levels in Dece corn and December wheat, and also with the November beans dancing here at the 100-day moving average. Hopefully we find support, but again, I hate to say it, but hope's not a marketing plan. There's still a ton of risk here. There is at least 50 cents worth of risk if the beans go back down to the June 30th low. There's at least 35 cents of risk in corn if we go back to the June 30th low. All right, guys, have a good day. This is Chris. Take care.